Hey everyone, welcome back to Corporate Decoder. Today, CNL Strategic Residential Credit Incorporated just filed an 8K about their net asset value and offering prices, and I am seeing some interesting shifts in how they're pricing their shares. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is adjusting its share prices, and I want to break down what this means for investors looking at their different share classes. Alright, so what we have here is a company called CNL Strategic Residential Credit Incorporated, and they've put out a report, an 8K filing detailing some important financial information as of the 30th of June 2026. This filing essentially tells us how much the company's assets are worth on a per share basis and what the new prices will be for investors wanting to buy into the company. The board of directors, which is basically the group of people in charge of running the company, met on the 24th of July 2026. They figured out the net asset value per share for different types of shares called classes for the month that ended on the 30th of June 2026. Think of net asset value as the real worth of the company's assets minus its debts, divided by the number of shares out there. It is a way to get a clearer picture of the underlying value. They've laid out the numbers for Class E shares and Class FA shares. For Class E, the net asset value per share was $25.34. For Class FA shares, it was $24.99. These numbers are important because they form the basis for what investors will pay to buy these shares. Now, the really interesting part for potential investors is the offering price adjustment. On the same day, the 24th of July 2026, the board also approved new prices for shares being sold in their private offering. They're actually basing these new prices on the net asset value we just talked about. But they also add in things like selling commissions and fees that go to the people selling the shares. For example, let's look at the new offering prices. Class E shares will be offered at $25.34, which matches their net asset value. Class FA shares are also offered at their net asset value of $24.99. But then we see other classes like Class A at $27.31, Class T at $26.24, and Class I at $24.99. It is important to note that for Class A and Class T shares, there are also selling commissions and dealer manager fees. This means the price you pay is higher than the underlying net asset value because of these costs, which go to the brokers and managers helping sell the shares. For instance, Class A shares have $1.64 in selling commissions and $0.68 in dealer manager fees per share, making the effective cost to a buyer higher than the simple net asset value. Looking a bit further into the company's activities between the 14th of January 2026 and the 24th of July 2026, CNL Strategic Residential Credit Incorporated invested quite a bit of money. They put about $9.2 million into companies that focus on acquiring residential mortgage servicing rights. These are basically rights to collect mortgage payments. On top of that, they bought 211 residential mortgage whole loans for around $65.3 million. This tells us they are actively expanding their investments in the housing and mortgage market. Now, as with almost all filings like this, there is a section called Cautionary Note regarding forward-looking statements. This is standard boilerplate. It basically means that any statements the company makes about its future intentions, beliefs, or expectations might not actually happen. The company is saying, hey, we're just guessing about the future. And things could change based on lots of risks and uncertainties. They explicitly state they do not plan to update these forward-looking statements, which is common but something investors should always keep in mind. They warn that actual results could be very different from what they are projecting due to various risks in the economy and financial markets, and also specific risks related to their business like their ability to pay distributions and find good investments. This filing was signed by Chirag J. Bavzar, who is the Chief Executive Officer of CNL Strategic Residential Credit Incorporated. This date, the 24th of July 2026, is when the report was officially filed. So what is the big picture here? CNL Strategic Residential Credit Incorporated is adjusting its share prices based on its calculated net asset value. For investors, this means understanding the different share classes and the associated costs. The company is also actively investing in mortgage-related assets, which shows a clear strategy. My take is that the company is transparent about its net asset value and how it influences offering prices. The inclusion of selling commissions and fees on some share classes is typical for private offerings and helps compensate the sales force. The significant investment activity in mortgage servicing rights and whole loans indicates a focus on generating income from real estate debt. A key risk to watch, as mentioned in their forward-looking statement disclaimer, is the broader economic environment and its impact on the housing market and the company's ability to perform as expected. For investors considering these shares, it is crucial to look beyond the headline net asset value and understand the total cost of acquiring each share class and the underlying risks associated with their investment strategy. The research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you like this video, please give it a thumbs up and subscribe for more. The Discord is in the description.